So how do you not lose money investing in the stock market? It seems like for the past 5 months, it's been very challenging, especially for tech stocks, as they've been aggressively selling off more now than, again, we've seen at least in the past couple of months. With that being said, is it impossible to invest in the stock market and make money? Well, no, right? But I think the better question to kind of ask yourself is, can you tolerate the time that it will take for the market to recover for you to actually make some money? And in this video, I'm going to be sharing 3 tips that I think every beginner investor should know before they begin to invest in the stock market. I hope that you learned something new. If you do, please make sure you drop a thumbs up if you feel like I earned it. And also make sure that you subscribe to the channel as I upload new videos every single day about the stock market for absolute beginners. I'm going to start sharing my screen so you guys can see exactly what it is that I'm looking at. And let me actually bring you back. One of the first things that I want to talk about is position size. And why is this so important? A very quick example that I can give you is, we all invest relative to what we're okay with risking. With that being said, the market's selling off. One of the number one tips that I always give our Learn Plan Profit members is the importance and understanding the importance of position size. So if you intend to invest, an example, $1,000. Let's use Amazon as an example. I'm going to go ahead and share my screen so you can see exactly what it is that I'm looking at. Amazon, after its stock split was at 120. Everyone thought that Amazon was a buy right after it did its split because it was going to take off. Well, surprise, surprise, the market's been selling off for 5.5 months after it did its stock split. Guess what? It's still sold off. Market sentiment is super, super important. So again, make sure that you never make an impulsive decision just because of what you think people are saying. Overall, it's market sentiment, in my opinion, trumps all. And if market direction is bearish, then yes, there could be short-lived catalysts, which means positive news that pushes the stock up for a short period of time, but normally it always ends up correcting itself once hype is no longer present. So with that being said, let's look at this on the day chart, meaning that every candle candle represents 1 day of time, right? How is it that you can properly invest with $1,000? A very common mistake, and I'm not calling anyone out. I've made this mistake so many times. What's going on right now? Well, the market's selling off. The market can continue to sell off. The Feds continue to raise interest rates. I'm sure you've heard it all. Because of that, I have $1,000 to work with, right? Does that mean that I should buy Amazon with my $1,000 and buy as much as I can? Well, you might be asking, well, why wouldn't I, right? Well, one of the sayings that we have within my Learn Plan Profit group is that the cheap can get cheaper. I mean, Amazon's been cheap, not just now, but it's been cheap last month and the month before that. But guess what? It has sold off and sold off and sold off to the point that if you look at previous highs and where we're at right now, it's down 42%. The cheap can always get cheaper. You trying to predict the bottom is never going to pan out well, right? Your job is not to predict the future. Your job is to simply prepare for it. With that being said, how is it that you can manage your position size to be effective? Well, let me give you one scenario versus scenario 2. One scenario is you buy the dip with Amazon at 108.95. You go in with as many shares as you can buy with $1,000, and then you're all in. Fingers crossed. I hope Amazon recovers. There's nothing else to it, right? That's scenario 1. Scenario 2 is position size. You take it into consideration. You understand market sentiment is still bearish. Market is still selling off and market can continue to sell off. You're very level-headed. So instead of going in with $1,000, you go in with maybe 10 or 20% of what you intend to actually invest in. But why would you do that? Why would you only buy 100 shares? $100 or $200 or maybe even $300 worth of Amazon and not $1,000. Why would you do that? Well, because you know that things can get worse. And how horrible would you feel if the market continues to sell off and you have no more money to buy the dip? On top of that, if the market does continue to sell off because you're fully invested emotionally, it's going to be more difficult to tolerate because you can't do anything about it. You're literally just sitting on your hands, hoping and praying that the market recovers. With scenario B, position size, you can buy 10 or 20%. The market can continue to sell off. and you're kind of just sitting back and relaxing, and you're like, well, I bought Amazon 10 or 20% because I wanted to. I don't need it to recover right away. I have 80% of my money still sitting here, and I'm only going to utilize that 80% when the market actually begins to recover and market sentiment returns to being bullish instead of bearish. When you actually begin to make money on your initial position, then you can decide to add more. Then you can step on the gas. And this is where position size, we get a little bit more into it within our Learn, Plan, Profit lesson library, but that's kind of the very simplistic way of why position size is so important. Not only does it put you in a lighter position, and it allows you to tolerate red days a little bit easier because you have less money invested. But on top of that, it almost excites you that, yeah, market can sell off. Or if the market recovers, then great, I don't care. Because you don't have enough money in the market that it makes you emotional, but you have enough to take it seriously. You need to find that balance. I think position size is super important. The second thing that I want to talk about is market direction. I cannot stress this enough. Past 5.5 months, I don't care how great of an investor you might be. When the markets are bearish and when market direction is bearish, when market is selling off, it is so much more difficult to make money as an investor because normally investors go long, meaning you buy and you intend to sell for a higher price point than where you bought it at. With that being said, I mean, it's impossible for the past 5.5 months. So because of that, you need to make sure that you put yourself in a condition in which you can tolerate. And this is what we've talked about. The analogy that I love to give our beginner traders within Learn, Plan, Profit is imagine yourself as a race car driver. You race a car, right? Very fast on a track. What are the most favorable conditions for you to perform at your best? It doesn't mean that you're going to win, but most favorable conditions for you to perform at your best. I would say that, hey, it has to be, warm enough that my tires can get sticky, but not so warm that my engine overheats. I don't want it to be rainy because then it's too risky. The floors are wet and therefore I can potentially crash, right? You begin to create your kind of checklist of things you need for it to be favorable for you. The stock market is no different. Select the conditions in which you want to invest in. The market direction has to be in your favor. The overall market has to be making higher highs. Market sentiment that's getting better. Inflation rate is beginning to drop. Whatever you come up with as your criteria, so be it. But the more that you come up with, the more confident that you can feel when you take that investment. Do you get what I mean? Market direction is so important because if something is selling off and you continue to funnel more money into that stock, you're just digging yourself into a deeper hole. But if something is consistently, this is a good example, making higher highs and higher lows, market direction is in your favor. So as a beginner, your entries and your exits might not be the best. Be realistic. Let's pretend that you're not a wizard, right? Let's imagine yourself as, a normal Joe Smo like me. By having overall market direction in your favor, making higher highs, higher lows, overall bullish market, you don't need to be perfect with your entries. You don't need to be perfect with your exits. But because market direction is in your favor, it's playing in your favor. It makes it easier. Still not easy, but makes it easier. There's still some red days, but again, you're investing. Your intention is to hold long term. So therefore, you don't need to get in and get out at the perfect price point. You just need to get in and get out when it makes sense. And by having market direction in your favor, being bullish, then again, you're making the conditions easier for yourself. It's still challenging, but you're making it easier for you to have a better chance to win that race. The last thing that I want to talk about is I can't stress this enough. How important it is to understand your intention as an investor. And this is difficult because it kind of puts everything together with position size, with market direction, with knowing when to step on the gas, with market conditions. By understanding your intention as an investor, normally investors buy and hold for a number of months and or a number of years. Their intention is not to make money now. Their intention is to make money in the future. So when you decide your position size, so when you decide, This is when I'm going to step on the gas and average up. Please make sure that you understand your intention. Put yourself in a position to succeed and to stay level-headed. By understanding that your intention is long-term, it should really alleviate some of the stress or pressure you might feel in needing to make money now. It will make it easier for you to understand that market can continue to sell off, and this is why you have a light position size. The market can continue to sell off, which is why you understand that it's not about averaging down, but that you want to average up into a bullish position. By understanding your intention, you're not trying to make money now, you're trying to make money in the future. So the day-by-day fluctuation that the stock market might experience, good or bad, shouldn't excite you, nor should it depress you or upset you. It is so important to understand your intention. For myself, I like to write it down. Anytime that I feel bothered by market conditions and or intraday activity, I look back at my notes and I remind myself of the simple intent that I had when I originally took that position, and it makes it just a little bit easier to see that light at the end of the tunnel. And that's it. Obviously, investing and trading is a lot more complicated than just that, but I think that this can at least get you on the right foot and having a better understanding of some of the mistakes to avoid and how to approach this, I would say, in a more level-headed way. You have so much time to make money in the market. Why are you rushing it? Prove it to yourself. Embrace the challenge. This is a very difficult time to invest. But one of the things that I know is that every previous recession, ask anybody, is viewed as a missed opportunity. But every current recession is viewed as a risky time to invest. And that's simply because we can't see the future, but we can always look back at history and always tell ourselves, dang it, I should have invested more. Keep it simple. You have nothing but time to learn, and you have nothing but time to get better. Embrace the challenge with open arms and surround yourself with people that encourage you to be the best version of yourself. I'd love to invite you to our free Discord group. We have over 40,000 members. It's absolutely for free, and that's going to be that first link down below. Feel free to send me a message. I respond to all of my Discord messages. Just introduce yourself. What is your goal, especially if you're just getting started, and how you think that I can assist you in doing so. I do trade live every morning, but I only trade live with my Learn Plan Profit group. They get to watch me trade live every day. They get to see where I buy. They get to see where I sell. They get to see where I cut losses, share my thought process, whatever the case might be. They are the only group that I work with on a closer basis. If you want to see if this group is a good fit for you, I encourage you to take 1 minute, click the second link down below, learn a little bit more about our Learn Plan Profit group, and see if it's a good fit for you. I appreciate your time. Again, I hope that we earned your thumbs up. Please consider subscribing. I upload new videos every single day, and hopefully I'll see you in tomorrow's live trading session. Like always, let's make sure that we end the year on a green note. Take it easy, team.